Well, good afternoon, and thank you for joining us for today's Manulife Business Success Series webinar, and it's on COVID-19 and your 2020 taxes, it's a page turner. Well, Adam and I we joke around that, but it's really important as we get to tax season to understand what the implications of COVID have been for you and your business. So we're pleased you've joined us today. My name is Ian McLean, and I'm the President and CEO of the Greater Kitchener-Waterloo Chamber of Commerce. Before we get started, I would like to take just a moment to acknowledge that we do live and work on the traditional territory of the Neutral, Anishinaabe, and Haudenosaunee peoples as we seek a renewed relationship based on a foundation of mutual understanding and respect. Today's session would not be possible without the continued support of our sponsors and partners, and so a special thank you today to our title sponsor of the Business Success Series, Manulife. Our platinum sponsor for the series is the Immigration Partnership of Waterloo Region, and to this month's presenting sponsor, RBC. These organizations are committed to supporting our local economy and providing businesses with the resources and tools they need to thrive. Just before the session starts, I'd like to go over a couple of quick reminders. Please ensure your microphone is muted throughout the presentation so we can reduce any background noise. If you have questions that come up through the session, you can type them into the question box in your control panel at any time. If it's a tech-related issue, a representative of our team will get right back to you. And if the questions are for today's presenter, they'll be gathered throughout the session, and I'll try and make sure that we get to them throughout the session. All attendees will be sent a recording of today's presentation, and it will also be made available through the Greater KW Chamber website. I would now like to invite Kristen Schmeiss, Senior Account Manager with RBC, to introduce today's speaker. Christine.
Great, thank you, Ian, and also pleased to be here today. And RBC is proud to be this month's presenting sponsor of the Business Success Series. And as Ian noted, I have the pleasure of introducing today's speaker. Adam Postma is a partner and business advisor with MNP's tax team in Waterloo. Adam works with businesses in various industries, including agriculture, real estate, and construction, delivering advice and solutions to help his clients achieve their strategic goals. Adam advises on corporate structuring, succession planning, tax minimization, and acquisitions and divestitures. He is adept at problem solving and identifying and executing innovative solutions to his clients' unique challenges while ensuring they remain in compliance. In 2011, Adam received his Bachelor of Arts degree from Redeemer University College, where he majored in accounting. A chartered professional accountant who qualified as a chartered accountant, he completed CPA Canada's in-depth taxation course in 2015. Please join me in welcoming Adam today. And thank you all for joining us. I'll now pass it back over to Ian.
Well, thank you, Christine. And as before I get to the first question, Adam, I think what's important about this series is when you look at the partners that are a part of this, and I think particularly at Manulife supporting the whole series, RBC, understanding and working with many of their clients will be small and medium-sized business. MNP, that's your sweet spot as well, is it takes a lot of people to a lot of professionals to work with business and give them the expertise they need across whether it's finance, insurance, risk assessment, as well as tax. So it's great to have you with us today, and thank you to RBC and Manulife and the Immigration Partnership for supporting us today. So Adam, I guess the way and we can, the first question is going to be the first question in about 12 parts, because we're going to talk about all of the government programs. But I can remember back 12 months ago, having just arrived home from Florida in quarantine and trying to figure out what we were going to do to support business. And I think everyone was trying to do that. Professionals like yourself, the government, business organizations. It really has been, I mean, unprecedented doesn't begin to describe, certainly in our lifetime, what we've gone through in this pandemic. Things started slowly because I think there was a lot of uncertainty, as we talked about. Right. And then there has been a avalanche of programs to try and support both individuals and business. And so I'm going to rhyme these off, but I think we should go through them, maybe take a bit of time and go through them one by one. But and you and I will know what these mean. Many won't, because there's so many. But the CEWS program, which is a wage subsidy program, the CERB program for individuals, which is their Canada Relief Benefit, the CEBA, which is the bank loan program for small business. CERS, I mean, there's got to be 8 or 10 of them. There's some that are run through BDC and EDC for larger companies, and smaller companies have different programs. Maybe take a broader view of how those programs have generally worked, and then let's come back and go through some of the challenges and how they've been refined over the year. But at the highest level, have they served to support business and individuals at the broadest level?
Yeah, and so clearly I'm going to talk a little bit about more businesses, right? Just my involvement with businesses more direct. You know, we hear some opining in the news about people receiving CERB and what kind of the concerns around CERB relief payments are. But as far as businesses go, we saw some initial hesitation with participation in the programs. We were like, well, what's going on? Especially when it started with, there's an acronym that we didn't see, and that's because it doesn't start with the letter C. Which is the TWS program, the temporary wage subsidy program, right? Which was small, 10%. It was, their first foray when they didn't really fully realize the magnitude of what was going on, and then suddenly they basically just got eclipsed by the CEWS program. The CEWS program was out for a little while. Since they gave some time frame on it, we had plenty of clients who were they're slow to the pickup because they had some time to be able to take before they applied. But we did see some very good pickup. We to the extent where we actually had kind of 2 people dedicated for a good period of time on assisting clients with making these claims and making sure that we went through with them. Our involvement ranged clearly. Some they wanted us in the trenches with them, because the one thing about the CEWS program that is relevant more directly for us is that there was legislation to back it up, particularly that needed to be parsed, that we needed to look through the legislation. So, okay, what are these terms? What do they mean? How do we define that? How is that interpreted? You look at those, that they needed a bit more versus other stuff like the CEBA loan, right? Well, that was, people all over the place picking up on that, because even if it's a loan, right, that free credit is free credit in some ways. And for plenty of people who were like, I need this free credit in order to float me for a while. Plenty of other people said, well, I don't know that for sure, but it's here, it's available. I'm going to put it in the bank, and worst case scenario, I pay it back, and I pay it all back, and that's fine. So that one was a very easy pickup. The CEWS was a pretty easy pickup. There's a lot of hesitation, I remember, in the beginning about the rent one, and I think it got renamed because I think it used to be, I can't remember what the name was. But anyway, there was the 2 rent programs that we went through. The first rent program, there was a lot more hesitation about. I remember this with the requirement that the company cover 25% and the government would cover some, and the renter would cover some.
Landlord actually had to do the application, which meant if they didn't want the business owner was screened out.
Yeah, exactly, right. And so that was, I remember that one. We have a decent amount of landlords, right? And they were looking at it, and they're having, well, they would rather not lose the money, right? If they could come to some terms with the tenant in order to come up with payment. So we saw some hesitation on that one. The CERB, from all intents and purposes of what we hear about it, that was picked up quite well. That one was applied for a lot. Again, we'll see how that turns out, because this is exactly why this time of year is so important. Multifaceted. This time of year is going to report on all of those benefits that were received in the last year and how that all flowed out, and the government's going to be using that to be inputting in, okay, what do people's income tax returns look like now after a year of this, and us handing out this money. We know the programs are out there. We know the amounts they allocated for them, but even in the beginning, right, they were reporting, well, the money's not flowing in these areas for some reasons, and we're not sure why. But the CEWS program ended up being, again, one of the ones that we saw the most, and we saw some very large impacts for, especially I think about one of our hairdresser clients, like huge for them, absolutely huge, right? Because they couldn't be open, and that was like, they were calling us and been like, what do we do? Like we can't keep the doors open. We don't know what's going on, and so helping them out with that in order to keep them going, and until they could open up finally and get people in the door.
Yeah, so I think generally there's been a lot of the way we described it is in March and April and May they were trying to you know, to have a plane take off from the runway while they were building it at the same time, which is a tough thing to do.
Yep.
And there was a lot of changes to the programs. As you say, the wage subsidy program started at 10%, to which we said it needs to be 75 or 80 to have any chance, which they, to their credit, they made changes. Same thing with the loan programs. There was some hiccups with the CEBA program and people being screened out. So they have done their best, particularly with, in the federal government, to make some of those changes. And I've spent a lot of time on a weekly basis, sometimes 3-4 times a week, explaining how what they intended to happen and what actually was happening weren't the same thing. So maybe let's go through, because the big ones are, and I think the one that is, and they've announced some extensions, and we can start with CEBA, which is the bank assistance or the loan program for small business. They've announced now, I think it was today actually, or yesterday, that they've extended the deadline to the end of June. So there is an opportunity if you haven't received that, and it was 40,000, of which 10 was forgivable. It's now up to a maximum of $60,000 loan with 20 being forgivable. Maybe talk about that program and how it works, and if you haven't applied for it, why people should, because I think we're still in for a number of difficult months, and getting some, even though part of it's a loan, you can pay that back. There is some free element to this.
Yeah, for sure. And you know, back when it all first started, I remember it was again, from that aspect of building the airplane as it's on the runway. Like it was like, there's a free loan. We don't really, you know, we have some criteria. Here it is. Then they were changing the criteria some. So now they've got a two-stream situation where you either have to prove non-deferrable expenses, or I can't remember what the other one is right off the top of my head. But basically, more or less to say, well, you know, this isn't for capital investment. This isn't for, you know, expanding the business per se. This is just kind of to keep the lights on, to show us that you know, you have some expenses that you can't push off. As far as I'm concerned, why is it worth applying for? If you're a business, and most businesses need capital, and you have these uncertain times coming up, like we're talking about, we don't know what the governments are going to be doing over the next 3 months, right? They really want to make it. They really want to make it to the summer. That's really how far that's where they want to make it. Capital for every business is the lifeline, right? Cash flow, cash flow, cash flow, cash flow. You know, we talk about financial statements and accounting, and financial statements are very important for reporting purposes. But it's, you know, the average small business owner tends to be looking at what their bank balance is, right? Well, this helps that bank balance, and that's to say, you know, getting that money in that bank balance to make sure that you can operate for next month. And for most, I would say, don't be daunted by the application process. I mean, yeah, there's some information there you need to provide, but I've helped a couple of clients through the process. I mean, it's not something that we help many with, but there's a couple we've helped with, and it really is. It takes, most situations when we're doing it, it takes 15 minutes to get in there and make the application. I mean, if people have experience with normal bank lending, right, that could take much longer for good reasons, right? I'm not discrediting the banks; they have their reasons why. But this lending process, you know, their application and our approval on the back end maybe is a bit longer, but the actual application up front is really quite easy, which they've made done intentionally, right? They want to get this, you know, if they promise the capital, they want the capital out there, and they want it in the market. So.
And we've seen with the wage or the bank loan program, with the CEBA program, getting the application in is not the problem usually. It's getting the approval back out the other end, because it's not really the bank that does the approval. It is the CRA or EDC, I think, is doing it. Well, anyways, whoever the agency is that's doing that one. And I guess one of the things that we've heard is, if you get a no originally or in the first instance, keep trying. And that's where actually we're encouraging, even though the banks are not the approver, that you're going through your bank because you already have a relationship with your bank. And I would be pushing them, and we've encouraged people to do this, push your bank and your bank manager or your person at the bank to dig in and roll up their sleeves and help you with this. It's in their interest and yours for the bank sort of at least understand why the answer may have been, or you may have been denied in the first place, because it has. We've got lots of examples of people.
Oh yeah, I remember last time we were on together. Yeah, we were talking with an individual who he had tried a couple times. Yeah.
So I think that, I mean, and we as we go through the other major programs, which is the rent relief program. The first rent relief program was a disaster, and we know that because it was only utilized about 30% of the dollars that they had set aside for it, because with the with a landlord having sort of basically it was a design flaw in my view. If they didn't apply for it, the business that was a renter couldn't get access to it. So they fixed that, and it seems to be having much more uptake. But ultimately, what Greg and I and our Ask the Expert session, you've been on some of those, and trying to get people is cash flow, cash flow, cash flow. Like, this is, while things are not fully open and we may go into another lockdown in April before we get the vaccines, having cash available to keep yourself going is critical. And that's where the wage subsidy program, the bank loan program, and in particular the rent relief program are really important.
Yeah, and so this almost feels self-interested, and so it doesn't have to be us. The other thing you got to keep in mind, though, is reporting is important for all of this stuff too, right? Like, reporting is key, because that's another reason. I don't know this for sure, right? But your reporting can have an impact on how your program applications go, because if you have good records and you're able to show it, right? Versus if you go to the government and you say, yeah, I'm having financial difficulties. Okay, well, can you show us financial difficulties? No, I just know that I have no money in my bank account. Okay, that doesn't tell me anything. You could just have no money in your bank account. Like, I don't know what your business was like beforehand, right? So that's much like everything. And I even think about back to the renter situation, right? If in the situations where I was talking to landlords, that was some of their concerns. Some of their concerns was, well, what are these tenants showing, right? What are they reporting? We just want to make sure that, the numbers that they're putting out there are the correct numbers. And so, much like everything, it comes back to reporting on this stuff to make sure that you have it, all lined up and squared away to the extent that you can. And that could be reporting done by individuals, if they're well equipped to do their own reporting. And then it also goes to the aspect of relationship, right? And you guys are a testament to that in the chamber, that the relationships can mean a lot, right? That's why having and being in touch with you guys and getting you guys, or like you said, getting the bank managers on your side and having, those discussions, and enables to say, well, what can we do? What other things can we explore, right? It's not just the accountants, it's everyone can be an avenue for solutions. So.
Now, one thing as we think about it, and for many businesses, you're now a full year past the start of this, and so some of the the wage subsidy program still is in. I think it's in operation until July, so there's still a period of months to go that you can still access them. But maybe talk about the year over year, because when they first started, it was, what were your numbers in February of the previous year?
Yeah, you had the option of the previous year. You had the option of the average of January and February. You could choose.
January, yeah.
Yeah, you could choose which one you wanted to do. Yeah, and so now we have that. Exactly. Well, how do we figure this out then for the following periods? And so we're looking back even further yet. And it's one of these interesting things, because it's a hard thing to debate. And I'm not saying that any government program is going to be perfect, and that's why that's fine. But like, we had some companies that were startups, right? Like, they were just getting going. Yeah. And then this hit, and it's just like, well, they had no real revenue to point to. And so they're like, we could have had revenue. We might have. So that's all that interesting stuff that is.
But I think one of the things that they have done is give some flexibility, where you can either use the year over year comparison, now that you're a year into it, or previous months, because various businesses have been impacted through the closures or the lockdowns in different ways. So yeah. I think there is some flexibility in that. Maybe talk just a little bit about that, and the important things for people to, when they're looking to access these cash flow support, what they should be looking at, because if you look at it one way, you might be screened out. If you look at it another way, or with another set of criteria, both of which are allowable, you could get a different answer.
Yeah, well, then that's actually a pretty big one. We've had conversations with this with some of our clients who, they're rather sophisticated, that they don't necessarily have the time to look at this. It's not just, it's not just as simple as taking the number that, let's say everyone uses QuickBooks, or, whatever, Sage, I think it's called, or whatever the new one is, Xero or whatever, right? And they just take whatever number is in there for that gets spit out at them. Well, people may or may not know, there's accrual accounting versus cash-based accounting, and those two things are provided for in these rules. You have the option to go accrual or cash-based. You have the option with some of the elections to include or exclude, and depending on how it is, related party transactions, and you have some ability to to look at everything's on a consolidated basis or a non-consolidated basis. And I mean, we won't get into that too much, but just to say that, if you think the answer is no, there's a good chance the answer might not actually be no, right?
I guess that's what we've been telling people across these programs is if you run into a first no, keep trying, because just like the programs were designed quickly, some of the application process were done just as quickly, and so there can be ways of applying and giving different information, all of which is legal, by the way. We're not saying
you do 100%, right? Yeah.
But it's as you say, meant to be quick. So I guess that's the encouragement I'm putting to people here is as you get into some of this reporting stuff and at the year end and saying, is this over? These programs are still live. You should be trying your best to take the time and work with your accounting professional, your bank professional, whoever is your advisor in your small business, and get approved for some of these, because we still have, I hate to say this, but we still got 6 to 9 months before we're anywhere close to being back to what the new normal is. And that means cash flow support is really important. So these programs are still in place in many of them for quite some period of months that can be a help with that. So so that's good advice. Listen, let's drill down a little bit more because it is tax season. The provincial budget is this afternoon at, I don't know, 4 o'clock or 3 o'clock, something like that.
How much we all pay attention to the provincial budget. Sorry, provincial budget.
I've been on briefings all day, so I just don't know what time I'm allowed to start talking about it. But it is this afternoon. Maybe talk, and then the federal budget, I think, was just announced for April 19th or the 19th, I think. So within the next 3 weeks, or 4 weeks, we'll have both the provincial and federal budget. And it's impacted everyone. It's individuals and the financial situation have impacted business, obviously. There's been some federal government updates on or giving guidance on some of these programs and what's happening. Maybe talk a little bit about what you think the federal and provincial budgets are going to indicate for these types of programs, if anything, and then the reporting part, because that's the important part. As we're going to still be in the middle of the pandemic, and you're still going to have to do your taxes, both as an individual and as
a. So we, I have to make sure I try to keep the politics out of this here. We know that regardless of whether your opinion is on it, right, there is spending. Spending has occurred. Whatever field you subscribe to a certain amount, there has to be inflow. Whatever that inflow is, there's got to be some inflow. So we know that that's something that they're aware of, and that's all part of it. There's both inflow and then there's a reduced outflow, right? And so we have two-side pronged on this stuff, and which is to say, they're going to be looking to say, okay, how can we bring in additional revenue? Are there sources of additional revenue? But they're also going to be looking at even initially to say, okay, do we need to revisit any of these programs? Like they barely started auditing these programs, right? And again, that's not to give them guilt or problems, right? Like they have a lot going on. I acknowledge that, right? And so now we've gotten through a year of these programs, and they're starting. And we've seen some of the stuff come through, so they're starting to apply their audits, and they still have all the old audits going on, right? So there's a lot of activity around audits for going on for this stuff, and they've made some tweaks. They made some tweaks in the fall economic statement. They made some tweaks to, or they indicated that there would be changes to the employee stock options, and they indicated that they're going to increase sales taxes on digital products, whether it's basically Netflix, or whether it's short-term rentals via Airbnb, more or less, or whether it's targeted at transactions via Amazon or other resellers. That's some of our original indications, right? And that's kind of stuff that was already brewing, that they are already working on. They already knew that was something that they wanted to do. So the fall economic update, since they didn't have a budget last year, they figured that was a good time to introduce that. But okay, so we going forward, are they going to have anything else? Right? What are they going to do? Well, I imagine they're going to probably speak to a recommitment to audit activity, right? That they need to make sure that those who are supposed to get these, again, everything we've been talking about is above board, and many of this stuff is very well defined. But there's always going to be, naturally, right? You have to do at least enforcement, even if that doesn't mean that they end up saying, oh, a whole bunch of people ended up doing it incorrectly. You just need to make sure things get checked. there's also the question about are we going to see, and this is, I mean, if you're within the accounting world, this quote unquote rumor is very well established rumor is the capital gains inclusion rate. Are we going to see a change in the capital gains inclusion rate? I'm not going to profess to know which way it's going to go. We hear our rumors, but rumors are only that. Would there be a change to corporate tax rates? Are there going to be any other new taxes? And we don't really know. So,
what would be the implication of both of those? So on the capital gains and on the corporate rate. I mean, presumably you're talking about them going up, or not just of the business, but what would be the impact of those in your view, or MMP maybe corporately?
yeah. So I like that distinction. I don't know. MNP might want this to be only my professional opinion, not MNP's. I don't know. The capital gains is clearly just going to be more tax on transaction, and this is recognized and this is actually prepared for usually for those who are otherwise contemplating transactions where there's actually considerations as to whether those transactions need to be triggered prior to a federal budget. When this federal budget comes out, like the dropping of this date was very big for us within the industry, because now we are going to be spending our time considering all of our clients and looking at everything they have going on and saying, is there anything we need to do right now because governments have a right to the legislation is what they do, but taxpayers also have a right to plan to a certain extent, right? Beyond, there's borders they can't go beyond, but to a certain extent, a right to plan their affairs. An increase, for instance, from 50% inclusion rate on capital gains to 75% inclusion rate takes the effective tax rate from around 26% on a top rate person to around 39% on a top rate person. That's a pretty big jump, right? That's a good chunk of change. Now, if someone's just selling their business and they're going to use their lifetime capital gains exemption and that's all the income they're going to receive, now it might not be a pressing concern for them. But for those who are otherwise having sales coming up, a lot of those considerations, whether, excluding the fact of whether we should do an inclusion rate or not, that might have impacts on them, right? That might make them change their mind as to whether they sell or not if suddenly they're losing 13% off the top. So.
Yeah, no, I guess one of those things, and that gets into, does that actually hit Main Street? And maybe not if you've got a business and you're selling your business, because that's your one-time lifetime capital gains expense. On the other hand, those can be the sources of venture capital for startups and other people that are people with dollars if they're not turning it over because it's going to be taxed, that can have some problem on investments.
I mean, I have one. I mean, it's anecdotal in its evidence, but I have one particular taxpayer who he likes to do those kinds of investments. He sold his business a little while ago, and he likes to here a little bit there. That person starting a business, that person starting a business. The capital's got to go somewhere when someone sells their business. It either goes to taxes or it goes into investments, and those investments, it's a circle that is, tends to be recirculated. The question is, what will it do to the average, even if not to ignore businesses, but to look aside from businesses for now, it will have an impact on the average investor. Again, whether that's the right impact or wrong impact, I'm not going to opine on, but, we won't see it as much, but capital gains so that everyone gets on their T3s that for the mutual funds that they have, or, right, we'll see some impact on that as well.
Okay, and this is sort of one of the questions that we were trying to get at. There's this, I guess, a narrative when you read the papers and the business pages that there's going to be that there's been a lot of, and I think this is where headlines don't always tell the story.
Always read more than the headline. I can agree with that.
Well, you see that there's tens of billions or hundreds of billions of dollars that have quote been saved by many folks, and savings rates up. And I question where for a great many people that there's been any real savings for, the middle class or those that are sort of in the lower income rates. But the reason I raise that is, even if that's true, one of the things that we're keep now being told is, do we really need to keep with the government stimulus for another, period of time? Because there's going to be this great pent-up demand by the consumer and by business that's going to spur, once we get people vaccinated and can come out more fully, that we'll have this great economic boom. Is that what your sense is from your business clients that that's what they're expecting to have happen? I mean, I just don't hear a lot of people saying, boy, I can, I think in September we're just going to blow the doors off. What I hear more of is people wondering when retail operations are going to be fully open. Is tourism, hospitality, restaurants going to be able to have full houses?
Mhm.
And so I think there's probably a lot of, I don't know, angst would be the best way to put it, and they're not sure. But you get the sense from the economists out there say, don't worry about it. We're just going to have this massive explosion of economic activity. I just don't feel that right now.
Mhm.
And maybe it's the uncertainty. What are you hearing from your clients?
Okay, so giving the caveat that this is strictly opinion and that this doesn't carry
Yeah.
much more than my words. Um, it's interesting to see the division because so I don't have within the firm clearly we have retail clients and restaurants and stuff like that. I've seen the hard impact on restaurants. I've seen the hard impact on retail, but they're not the ones who are what I'm going to say quote unquote commanding my attention right now. What are commanding my attention right now are some of those clients who they are having their banner years. They're having some of the best years they've ever had. And these aren't even necessarily just restricted to those clients who you might think are only on online business. You know that's all they've ever done. These are some clients who are in manufacturing who they just have a product that is for some reason very resilient, right? Either it's because they sell to industries where, telecommunications maybe they sell to and those things are keep going or right. Like we have seen some fantastic years for some of our clients. We've seen some horrible years. It's almost like it's interesting how it seems to exasperate the differences and make them worse. Now, again, I have no study on this. This is strictly my anecdotal evidence, but my this is where I think we're going to disagree only just from a sense of optimism, I guess maybe. I have an optimism in line with the economists. I think that I think people are waiting to go out to restaurants. I mean, it's not everyone. I'm not going to say it is everyone, right? And I can recognize that because we're not all the same people. We all have varying levels of concern about this virus, right? In our efforts to wear masks and keep distance, some of us are maybe more predisposed to sanitize our hands more regularly than others, right? That's just the nature of an individual. I think there's still, though, a decent amount of the population who would love to, on a safe basis, get out there to restaurants. Love to, on a safe basis, go and actually buy something in store freely. I mean, we can do some more of that, but I give in my own instance, right? I mean, buying stuff during the pandemic when things were closed down, buying it online. I give the example of going to Home Depot and ordering online. It's like, well, I have to order 3 things because I don't know exactly which one I need, and I'm going to buy them all, and then one of them I'm gonna keep, right? Versus I like the tangible experience of that is still nice, right? And it's interesting how this has shown that it's kind of given examples like, well, okay, we've test driven what a fully virtual economy is like, and it doesn't work quite the way we might have otherwise expected it would. So there's somewhere in between to be had, right?
Well, I guess maybe that's the question. I'm not saying I'm not optimistic. I think there's still a lot of reticence that people know what the end date is, and so that
Oh,
maybe
yeah,
the uncertainty of when people are going to get back. I mean, you see the news and see Australia is basically back to being completely wide open, and that's the hope. But I think we're a long way from that, and I guess that's where I sense the uncertainty. But to your point, what are the things that because I think it is sector by sector, right? I mean, when people, we hear the same thing. If you're in and there can do your business fully digitally, may have been an inconvenience and to get some getting used to of having your staff be remote. But some of those are having really good years. I think it's where those front-facing businesses that still have
yeah.
to rely on congregate settings, people being together, and some of those are the challenges that manufacturers are having. But retail, restaurant, hospitality, tourism, entertainment,
Entertainment is huge, huge
yeah.
impact. Yeah.
So those are, I guess that's the uncertainty that people have of when you get back to a new normal. Maybe talk a little bit about that because I think that's one of the things that we hear and in my conversations, my staff's conversation with our members and people more broadly is the new normal isn't going to look like what did before. So what does the new business model for in every sector look like that has more of a digital or an online or virtual component to it? Because I think just about everyone's going to have some aspect of that.
Yeah, I mean, we see this even with our businesses who have, they started doing an online store as a result of this, right? We've seen Shopify explode in its business activity because Well, suddenly I need to, they might be the brewery just down the road who was used to a lot of in-person sales, being that was part of what their charm was, right? Was, okay, you can go to the brewery, you can pick up a couple pints and you can talk to the person there and ask them about it, versus now they've had to add that component online where it's like, okay, we are selling online, we're selling that component of it. I think it'll be interesting. It's almost like those who, I think many entrepreneurs who, they start a business, they're used to some level of risk, right? They're used to taking on some level of risk, and so they, in some ways, this is a new challenge and it's stressful and it's uncertain, and that's not good. But there is probably a good amount of willingness to succeed. I think what could be interesting is the amount of, and we've seen some of this within some of the professional space. When I say professional space, I mean kind of doctors and dentists. We've seen some people who said, that's it. I'm not doing this anymore. It's not worth it. I can't go, like they're more advanced in age. They're like, I can't do this. I'm getting out. And so we've seen some pressures in that space because of this aspect of people who might have stuck around longer, deciding to call it a little bit earlier. And now we've seen the market kind of react to that. So, it's not just the housing market that's having some interesting results right now with COVID. Again, I'm gonna refrain from saying this is a definitive thing, but I see a suggestion that some business prices are having an impact as a result of COVID, because there's a lot of risk in starting your own business from scratch right now, versus if you can get in and you can make the metrics work for a business purchase of an already established one, that may make more sense for some people. And so we're seeing some heavy impact under that. Yeah, the uncertainty definitely, are we going to have the money to fund these things? That could be it too, right? I mean, they could have plenty of ideas, but if no one, and I'm not saying no one is out there lending, I'm not making that suggestion, but if no one's out there lending, right, to the businesses, they might have all the ideas in the world to convert it to digital or to a virtual environment, or, every once in a while, I watch the entertainment industry just because I'm particularly interested in the music industry. You see these things, well, they have these concerts where everyone's in a bubble, or they have, like in the UK, I think they did it where they were kind of on platforms all separated out. You have to stay in your platform. Okay, those are ideas, but that requires a lot of capital, right? And if the capital is not there, and even just the willpower, then we're going to see some definite impact on things.
Okay, so let's come back to it's budget season. There are some new measures in place, or the ones that have come in through the course of the year. We talked a little bit about compliance and enforcement, and that's you're going to see more of that. I guess you'll see some of it even in doing your taxes and submitting your taxes, whether as a business owner or, for that matter, as an individual. There could be some audits, where they want to see that your background or your backup materials. And this is not necessarily an infomercial for you for MNP, although what's your advice when someone gets one of those? Because many will do this on their own, but I would say some of this gets pretty complicated pretty fast, and you can get run over by bureaucracies. And I used to work in one of those bureaucracies, unless you have an advocate. So again, having your accountant or your banker or your lawyer or your financer that can help you with it is pretty important. So with all these changes and everyone's different, in terms of compliance and enforcement, at what point do you kind of advise getting someone that's an expert to give you at least some advice, if not doing all the work, of doing some advice? Mm-hmm. Because I think it's important that that people have an understanding of when this happens, and sometimes it's routine. It could be a routine audit, but you still need to make sure you are prepared.
Yeah, and so just to talk about that, I would say, why do we all use professionals anyway, right? Like, why don't I just go do all of the the plumbing in my house, and why don't I do all of the electrical? Well, it's because clearly there's a skill set that comes along with doing that and doing it again and knowing the codes and knowing the regulations. And, okay, I might be able to, I'm going to overly simplify it. I can put a new faceplate probably on my electrical switch. That's probably fine. That's probably not a concern, right? Like, I'm not really going to get in trouble with that. And I think an electrician would probably look at me and say, I don't want to do that anyway, right? Because it's just the level of involvement. And so that's where you get to the stuff like, I'm going to go from a simple level of, they've asked you for, let's just say, donation receipts. And you've been, your package came back from your accountant and all the donation receipts are in there. what my response would be is let the accountant know and say, like, I'm comfortable with just sending it in. Do you see any concerns?
Right.
That would be my starting thing, right? It's just it's providing information that's readily available. There's nothing there that, like, I say that because there's no real inherent interpretation associated with donation receipts. You either have them or you don't, typically. Like, that's pretty much, it's either there or not, right? Versus when you get into some of these CEWS claims, right?
The wage
There
subsidy.
is, yeah, the wage subsidy. Sorry, CEWS. Yeah, I know. I always had called it CEWS, but anyway.
I have a bad habit there too.
The wage subsidy, just because there are multiple avenues, again, all legitimately that you can go under, you need to assess your own understanding of what's going on and your readiness to engage it, and your readiness to say, all right, this is something I can handle, there's something I can't. And again, I would say your initial reaction, what we always say in the professional business, and I'm sure that everyone in professional business, we'd rather know and not necessarily be involved than not know at all. Right? Usually not knowing at all, and being like, oh, well, you had that yourself. Like, why did you do that yourself? Versus, right? Like, or I've had people call me up and I say, to be fairly honest, this isn't the kind of thing we need to be involved in. You can handle this likely. Obviously, we're willing to help if you want to, but this isn't necessarily something that rises to the level of needing us to get involved. I have an ability to recognize, right? You know, I could come to someone's house and pick up their receipts and tabulate them in their kitchen counter. And I mean, I'm not saying that there aren't accountants who do this, right? But clearly different levels of experience, different things, right? I could do your tax returns all at your house. But maybe if I'm going to charge you a certain amount per hour, you might be like, oh, that wasn't worth it, right? And so there's a value and risk benefit proposition there, right? And so I want to recognize that, right? What I find is that it is their job. The CRA is becoming a bit more acrimonious. They are getting a bit, and I'm going to say in some ways all rights to them, because that is their job, is to, that's why our job in one side is we're supposed to, represent the taxpayer. Their job is to represent the government. Okay, I can recognize that, but it's what it is. We're acrimonious only from the aspect of that we're fighting for our positions. We're not acrimonious with each other. Like, I have very cordial calls with the CRA when I talk with them. It's all pleasant. And we still disagree vehemently about interpretations of various things, and that's okay. And that's where, again, the call to your professional advisor, not M&P, it's whoever your professional advisor is. You've clearly chosen them for a reason. Call them, ask them. They will probably tell you whether they think they should be involved or not, right?
Yeah, and I guess it falls into in when it comes to public relations and media. They always say, don't get into an argument with someone who buys ink by the barrel and newsprint by the roll, because you're never them. But if you're going to, you better have someone who's good at it. And I guess the CRA has a job to do, as you've described.
Yeah.
Is first of all, try and do it right the first time. But when these things come up, is probably, I guess that's what I was getting at, especially with these programs and how much movement there has been. And a lot of times CRA programs are pretty static. There is some interpretation, but this particular year with a lot of these programs, they have changed from week to week. And there's been lots of changes, and I think that's where I was going with this, is to make sure that whether it's your bookkeeper, or whether your accountant or your banker, whoever you've been working with, is probably worth, particularly for small and medium-sized business who don't have the level. We're doing everything. I have a little business, our chamber. I still rely on experts because it can get complicated pretty quick.
Yeah, for sure. We've seen, so on the wage subsidy claims, we've seen some of these letters. These letters are quite involved. And so that's where, again, I would say, like, we tend to be involved on those from the aspect of, even if we're not compiling the information, we're usually taking at least a look to say, okay, is there anything about this information that maybe you're missing, that maybe you've misstated just because of just different ways of referring to things, right? Like, they might be looking for a technical term, you used a non-technical term, so if we just submit our technical term for the non-technical one, right, the submission will go better. Like, we see, like, I don't know if for the wage subsidy claim, if we've, to my knowledge, I mean, this is the whole thing, I don't know what anyone doesn't tell me, but I don't know if, to my knowledge, we haven't been involved in any wage subsidy audit. To my knowledge, for our clients who get them, we've been involved.
So I mean, and this is maybe kind of the last part of this. dealing with CRA can be overwhelming because you're dealing with other stuff and you feel like you're underprepared for what's coming. One of the things that strikes me as being prepared, and so we're at the end of this fiscal tax year.
Mm-hmm.
A lot of these programs, a lot of the COVID things are going to keep going on, which takes you into next year's tax year. So what would you, from a tax planning perspective, so saying like starting right now as you're coming into your new year, what are the things, the little tricks so that you're better prepared next year? You know, we'll be coming out of the pandemic. You know, you've gone through one tax year. You don't want to go, even if you have some issues in this year, you sure don't want to have next year. So what should a small medium-sized business be considering right now from a tax planning perspective so they're better prepared for next year?
Yeah. So one thing I'm gonna point to particularly would be potentially is losses. Right? We might be realizing some losses in these situations with some businesses. Right? I mean, we have all kinds of results across the spectrum, across the industries. But in situations where there's losses, we want to, where at all possible, because it might be division lines, it might be businesses separated. We want to see what we can do in order to make sure those losses are utilized. Because losses utilized against either prior years where we can get those losses can result in income tax refunds that give us some of that cash flow and that capital that we can use going forward, or to defer tax going into the future, or to do various planning. We want to see, are there ways to utilize losses that may exist to our benefit? That is some of the biggest planning right now. And then you want to think about, is there any, based on these changes, right? Like if you are expecting certain treatments on transactions, if you think that, corporate tax, so this is which plays against it. Because if you think corporate tax rates are going to go up a lot, you might actually not do much. You might change your utilization plan. But again, it's just the aspect of having the conversation to say, okay, what kind of objectives do we have? Do we want to, are we looking to sell off a business line? Are we looking to sell off certain assets? And then we need to get, certainty on those. Are we wanting to streamline? Maybe we run two kind of business lines and we want to separate them because in the past we haven't been able to get the wage subsidy on it because they've been combined, and if we separate them out, we don't know about the results of the one division. The other division is doing well. Maybe if we separate out those divisions, we can access some additional benefits under that. Say, like, we're still running a business, we're still employing people, but if we have some troubles with that one division going forward, perhaps we have an ability to access more capital. So looking at that, how do we want to reorganize things that way? Is this a time to change, the state of the business? Do we want to consider transferring it to the next generation if we want to get them involved? What would that look like? There's always this, as it goes with budget, right? Budgets keep tax people employed. As it goes with budgets, we always want to say, is there anything we need to do pre-budget in order to position ourselves the best going forward? What kind of stuff happens in the budget, and how do we consider that?
Yeah, I know. I think that's probably always a good idea around this time of year anyways, is to be talking with whoever your advisor is on, bookkeeper, accountant, financial advisor, on what changes that are being made in the budget mean for you and your business and your, employees and yourself.
Yeah.
And how to make sure you're maximizing things to your benefit, because that's what you don't want to leave money on the table or pay more in tax than you're obligated to.
Yeah, and I would even encourage people to reach out to your advisor, whoever your advisor is. Almost basically anytime you're doing any substantial transaction, change of business. I've had instances where I've had clients call me and it's like, okay, well, we're thinking about doing this. I was like, oh, I'm glad you called me, because if you're doing that, that means that we have this follow-on that you could participate in if you would like to. I mean, no one is obligated to do certain things, but if this was something that was appealing to you, it has certain results, it has certain drawbacks. Is this something that you want to consider? Right? It's always that aspect of whenever you have a transaction going on, transactions are opportunities, larger transactions, right? Not your daily transactions selling to, across the counter, but larger transactions are always an opportunity to say, well, is this a time to reconsider how things are structured, reconsider what tax planning I've put into place historically.
Well, that's a good place to leave it. Getting advice from people that are smarter than yourself when it comes to taxes.
In a certain area, yes.
Well, always a good plan. Listen, I want to thank Adam for joining us today, and MNP for making you available. We appreciate you providing us with your expertise. And I always like Wednesdays because I call it tie day now. It's Business Success Day, and I get to put on a tie. So I'm always.
Yeah, I didn't get the memo, Ian. You didn't get the memo. Otherwise, I would have worn a tie.
I just say once a week I got to put on a tie. Otherwise, I'll never put one on again. Listen, thank you, Adam. That does bring us to the end of today's session. Thanks again to our title sponsor of the series, Manulife. Our platinum sponsor of the series is the Immigration Partnership of Waterloo Region. This month's presenting sponsor, our friends at RBC. Again, to today's speaker, Adam, we appreciate your time. Finally, to all of you for joining us today, as a reminder, we do host a new Business Success Series every Wednesday at 1 o'clock. Join us next week for Building Your Business Through COVID and Beyond. Find out what you need to know as a business owner navigating this new environment. We will be joined by a panel from our friends at RBC, the EDC, and Grant Thornton. So we hope to see you then. For full details and to register, visit greaterkwchamber.com. Please share this series with your friends and colleagues and join us every Wednesday afternoon for another edition of the Business Success Series. Because if it's Wednesday, it's the Business Success Series. Have a great afternoon. Thanks so much. Thanks, Adam.
Thank you.